Evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Tuesday, January the 31st, 2023. Well, here we are on the eve of the great and mighty Fed meeting. And first, I just want to state that I am well aware that the market is totally set up for a 25 basis point rate hike. There's been kind of in a little bit of tussle, a little bit of a conversation with a couple of folks about that's already been factored in. That part I want to make clear. I realize that's what they have factored in. What I don't think that a lot of traders realize is that not only has it been factored in, but now the markets have become extremely overvalued. In terms of where we are, in terms of even with only a 25 basis point rate hike, it is still a rate hike. Rates are still going up. And therefore, what that does suggest is that this whole rally, this whole move is so overdone and overvalued that if we did the math, in order to support these levels, that would be 4,100 in the S&P to 4,200 and 12,300 to 12,600 in the NASDAQ, interest rates would have to be dropped back down to 1%. Now, unless you think that's what's going to happen tomorrow or in the very near future, then the reaction off of whatever does come out tomorrow is already known. So buying it up may be a shot in the dark. It is going to be more related to derivatives trading than reality. But again, I would suspect very highly that we're going to get a reaction no matter what comes out. But as was stated by a subscriber who I truly appreciate, and I appreciate the conversation that we've been involved in, that it's not so much that the amount of the hike that's really going to produce any type of reaction. It's going to be the press conference with the Fed chair, Jerome Powell. That I 100% agree with, because if he comes out hawkish, we're cooked. Now, I really do think that after today's data, which was the employment cost index, which really just shows us wage inflation, that index still went up 1%. But the reality is that the reaction off of that number was like, well, let's take it up. Why? Because it came in 0.1% better than what the consensus was, what the expectation was. The expectation was 1.1% hike in employment costs. So understand that how our market has decided to interpret things is, if it came in less than what was expected, that's bullish. It still is a rise in the cost of employing somebody, which is inflationary. Now, the battle is to fight inflation. So when you want to hear a narrative being said, inflation's dead, market's going to go up, we've reached a bottom, then you're going to have to start and look for proof. That's been my argument and my conversation all along during this whole thing. During many phases where we see the CPI jump, where we see the market rally off of a 0.1% improvement in the CPI, when we see that the PPI has come down because of the smoke and mirrors, the way they put together the numbers, we need to be a little bit more in tune with what the reality of our situation is. Now, that does not mean that we all walk out tomorrow and we just start shorting everything in sight. No, we have to be able to trade smart. We need to be able to trade what's in front of us. And again, I want to state that's why I really became more of a day trader and stopped being a position trader via options. I was tired of dealing with the volatility. I was tired of dealing these kind of moves that we're getting like that didn't make sense against what really was happening behind the curtain. So when I'm going to make this approach, and when I'm talking about what the type of reaction we may or may not get tomorrow, it is based more on what's really going on versus what the market is pumping up to an over-evaluated marketplace. Now, part of that is coming from derivatives trading, options, what trading in the options. And what are the options all about? Well, the volatility gets high enough and that gets translated in, right? Because we're looking at the VIX. VIX is still trading below 20. What are you talking about, Michael? What are you talking about? Volatility. The volatility is also equivalent to premium. So when we look at options volatility versus the VIX is showing us complacency, right? We're selling volatility because we're complacent that the market can't go down. We're going up. We're just going to continue to go up because we're hearing all of this noise. Now, when we look at the options, again, we're looking at, say, stock like Tesla. Tesla has been volatile, and it is an option trader's dream. And what I mean by that is if you know how to play volatility, if you know how to play premium, if you know how to put on positions that reflect taking a hold of premium, because that premium normally will disappear as that option contract gets closer to its expiration date, and it then gets tied more to a dollar for dollar with the underlying. And that's really what I'm talking about when I'm saying premium and volatility. Tesla has been a trader's dream lately. Number one, the liquidity is mind-numbing to me when I see that 200 million shares are consistently changing hands every day, Monday through Friday, in Tesla, as these options that are weekly expiration options are expiring. You know, they start on Monday and you start to see them build these positions where 100,000, 200,000, 150,000 options are trading and a one strike. And those might just be calls and then the puts. So we're seeing like 1 million options or more collectively trading between puts and calls just in that front month or that front expiration, which in the terms of Tesla is Friday. So there's so much money going around, there's so much trading happening that when we understand what the hedge is or how these trades are put together, if I'm selling premium in the calls, I'm selling that premium and I'm buying the underlying, I'm buying the stock. That's the hedge. If I'm doing it one-to-one, so in other words, I'm selling one contract in the premium and I'm buying 100 shares of stock, that then equates to now I need to go and trade the put. So if I'm selling the call, buying the stock, I'm going to have to turn around and buy the put. Now my delta is totally neutral. So no matter what happens to the stock, if I did my pricing right, you can lock in your profit and have no price risk. That's what algorithms are doing en masse every day across a wide variety of stocks. Another example, we have the next meme stock, which happens to be Carvana. Now, Carvana, great idea during the pandemic, great idea. Carvana goes to, I think, $300 and some odd a share, and then nosedives, crashes all the way back down to 3 something, I believe. And then somebody decides that they're going to do the short squeeze, they're going to do a gamma squeeze, they're going to try to do something in that stock, and now it's trading over $10. That's crazy, right? But it's happening, and it's trading huge volumes, and the options are trading huge. So again, what we witness does not necessarily is indicative of a true bull market or why a bull market would happen versus a bear market, et cetera, et cetera. So illusions, overvaluations, and it just keeps growing. Eventually, it will stop. Eventually, we will slip and fall. I think we're reaching that point very quickly. And because I believe we're reaching the end of this corrective structure. Right now, beginning here with the S&P, I'm working on an intermediate wave 2. Again, I'm just going to flip out. I'm going to go, no, I'm not going to flip out. I'm going to go out to flip out to the 4-hour chart so we can see the structure. Again, a week or so ago, I had to revise my labeling. And where I had initially marked this as the completion point for intermediate wave 2, putting us in that intermediate wave 3. Well, that's been put on delay. Why? Because we've got all this whole thing going past levels that it shouldn't, and now producing a very strong rally. So I shifted, took this down, went that this was just wave A, minor wave A of intermediate wave 2, and not the whole thing. This was minor wave B of intermediate wave 2, and now we're in minor wave C of intermediate wave 2, and it's going to consist of 5 waves of minute degree. Now, I know there are other Elliott wave firms that are counting this differently, and they're using something called WXYZ. And I do have a problem with that, and the reason being is like not necessarily that particular counting and the labeling is not incorrect or correct. It's just not going back to the original principle that R.N. Elliott put forth. So having someone call it Elliott wave, I'm like, well, I'm not finding it within Elliott's work. And if it's something new, then why isn't it in the newer books on Elliott wave? So I'm having a little bit problem, but I want to tell you what the end result is. The same. We're racing up to a top. Whether I'm going to count it WXYZ or 1, 2, 3, 4, 5, we're getting up to that same level. We're getting up to the same point of where we believe this all should end and then turn. So I'm bringing this up now because I get a lot of people that comment and they're trying to share with me about a count, and they start talking about a WXYZ, and I'm like, well, maybe we should just call it what it is, a double and or triple ABC correction. That's really what it is. They just decided to change the labeling and call it something different. Now, where are we here in the S&P? Again, we're in the minor C wave going up. Now I'm going to go back down to the hourly chart so we can look at the internals of what we've done. Now, again, pretty much last Friday, I moved the minute third wave up. And really, which was, I believe, here. I don't know, maybe it was here. And I was counting, that was it. I put it here, and this was 4. And then this was all a part of minute wave 5. 1, 2, 3, and then and in a subminute degree, but then we got this, and it went down and broke that. So I had to move this up. And that's the third. We finished the 4th, middle of the night for me, during the Globex session, reached that low, and pretty much did exactly what one would think. They started to pick up the rally again. We got that number in the employment cost index. We thought that was bullish. We went up, we went down, and then we picked up the rally again, and it continued to rally all the way through. Now, where are we if this is going to be the minute fifth wave? Minute fifth wave, honestly, folks, just needs to put in a new high above 41. What was that number? 4109. Put in a new high above there, and the structure being 1, 2, 3, 4. We're going to produce the fifth. We still may have a little bit more to do on that fourth wave, but I don't think this is over. I think they're still going to play this game into we have some more earnings. So even with the Fed coming out tomorrow afternoon, we may get a severe reaction, in which case, fine, we'll be able to count it, we'll be able to deal with it, but it's going to depend on where it's going to start from. So right now, if I'm in this minute 5 and I can count 1, 2, 3, 4, wherever 4 begins to end, then I'm going to be able to run fibs and we're going to get that fifth wave. Even if I took it just let's give a guesstimate, okay? Guesstimate. And what I mean by that, I don't know if wave 4 is done yet. They may still have more to sell. We don't see the Asian markets don't open for another 25 minutes. Then we got Europe who's got to chime in. So we first need to realize, let me go back. So we can wrap some parameters around if indeed this is 1, 2, 3, and we're looking for 4, well, then we got to take it from there to there. We got 40, 69. So we got a little bit, less than 10 additional points, but we'd be looking for that. Where's that bring it? Right down to the 8, the hourly 8. Continuation, I'm not looking for 618, not in a wave 4, maybe 50. And that just takes us to 40.62. And then we start to rally again. So I'm going to take that off. Now let's go and put a guesstimate, again, I'll use the 8 as a stopping point for wave 4, and then we start to rally again. And so I'm just guessing because we don't know that that's where that's going to end. So one more time, we're now looking for wave 5, and now we're going to take it from wave 3 down to wave. Actually, it's going to take it right there. No, I can get it right there. All right, so look where we line up. 41.29. That's above 41.09. It would produce 5 waves up. In fact, we got a lot. We got some initial 40.93, 4100, 4105, 4112. Then we start to get a little bit of a cluster, 4118-ish. And then we have 4125 to 4129. Now, if it really wants to gain some steam and blast itself higher, look where it all starts to come back in again. 4187, 4209, 4207, 4213. Now we've added another point right in here. So again, the 4200 now has got a double. We got a double just below it at 4187. Then we got singles all the way down. So if I had to say, we got a little bit of a cluster right there at 4129, fits the bill, does not overtake wave A though, but as I've discussed before, if I get a structure and it's good and we turn, then it ended in a failure. Now remember what I have brought before in that this, if I bring this down to a close basis, we get rid of that. We're down to 41.42. We have again, actually, did I do that wrong? No, those are the labeling. So 41.37, 39. So we start getting up here. We are now meeting where wave C would exceed wave A. So that works. It works very cleanly. So I'm going to go back over because I do my fibs and everything off of including the extremes. So back down to that hourly chart, open that up again. So what are we looking at? Maybe we come down, if we hold there, maybe we come a little bit lower, then we'll have to, you'll adjust these numbers. But right now we're giving that this small wave 4 gets itself around 40, 71, 72. that would be the guesstimate. We're not looking for much more than over what we've already done, but getting us to a level where we can count 5 up and we get a new high for the sequence. So wave 5 should take out the high of wave 3. So that would fit the bill, and then an extreme push seriously fits the bill and sets us up to that upside level that continues to show up as we run our fibs internally and internal within the C wave. We continue to show up for this level being also the larger intermediate wave 2. So all in all, it all looks pretty good. So we have our levels. I'm looking for this thing to complete. It may do it tomorrow. I would think it would, because we do have the Fed, a very highly anticipated number or report. And more, since we are expecting the 25 basis point hike, it's going to be more of the press conference. So the hike we'll know for certain at 2 p.m. Eastern. At 2:30, Chairman Powell steps up to the mic, and then what he says will be very, very closely watched and picked apart for signs of being dovish or hawkish. That's what everybody's going to be looking for. What's he really going to talk about moving forward? So, moving averages are kind of back in alignment to go up. Remember yesterday we were kind of looking at the 20 needed to get across the 50. So here we have the 200, the 50, the 20, the 8, the 4. All heading, all heading higher. Let's go over and take a quick look at the NASDAQ. Pretty much the same story. We have here, let's open this up so we can see a little bit different. So in this one, I'm going to say that, we got 1, 2, and 3, and then a little 4, and it's actually come down to the 8. And if I had to put some quick fibs, I would actually go down to here, up to there, and 382, bing, hit it on the nose. 12,084, and right now we're trading at 92, and I think what was the low on that bar? 90. Pretty close. Maybe we got a little bit more, bring it down to 84. Again, we're out here on our own as far as the US market, because we now need to get the Asian markets and then the European markets, get them reacting. But they may not want to take it down. They did yesterday, but we were pretty well into it by the time Globex picked up from here. We took it up, and then as the Asian markets came on and the other markets came on, we just sailed lower. So again, same deal possibly. If we break down, it just really should not go below 12,015, because that would be where I'm putting wave 1. The only other interpretation that I can give is this whole thing is sub-minute wave 1 of minute wave 5. In which case this is a 2, then we'd be looking for it to come down here and then scream in a 3rd, a 4, and a 5. So we got to wait. We got to wait. This is where the difference between the two markets, the S&P and the NASDAQ, kind of comes in. The NASDAQ could just be finishing wave 1, where when I look at the S&P, it looks like they're finishing the whole thing. And again, maybe they're only doing wave 1. And then we can get a wave 2, a 3, and a 4, and a 5. I don't know. A little bit different. We got to let the market tell us. So I'm going to remove that. Now, I can't even really put any extending because I have nothing to really connect to it. 3 and a 4, and then, all right. We'll give it a shot. We'll give it a guesstimate. If we got a 5th wave left to do, we definitely looking that we need to get above 12,311. And we're having trouble getting just holding above 12,100. But let's just take a look. Again, using here to here. And I'm going to bring it down to that low to there. And where do we have? 12,465. That sits out by itself now. So this fifth wave doesn't protract, does not go up that high. Fifth wave, 12,465. Those are pretty high numbers in terms of the fib. 12,404, 344. So we just need to get above there. Now, if I pull it back out, let's take a look at that 4-hour chart. The A wave sits all the way up at 12,343. So really, you know, if we can get above there, then this in the NASDAQ is a lot closer than the S&P. Now, watch this. That kind of goes pretty far away, but still 12,279 would be that high. So again, we're not really fudging because the line chart is the close. The bar's close. The candlestick shows the extremes. So again, we've already gotten up 12,307. Pretty close. That was the top of 3. If we're looking for that to get over, that should be easy. So the NASDAQ then, maybe a little bit confusing on what this fifth wave is going to look like, but it's a lot closer to, for wave 5, getting above wave 3. And if they give it a solid push like we got in several points today, I would think we're there. Then what are we looking at? Well, that one right there would definitely get us above it. Just barely, but it works. And that's going to be 1.236, where wave 5 would be 1.236 of wave 3. Remember, wave 3 is little. It's right in here. It's not this big one. So we can start to match up. Where do we have a lot of crossover? Right there. 12,465. So possible. Again, remember, we can't say for certain what the reaction to the Fed is going to be. We know what the hike is going to be, or what the market is already baking in what that hike is going to be. So maybe the surprise comes if the Fed decides, no, we're not. We're raising it higher. We're going to go up 50 basis points or 75 basis points. I've already heard from you guys, 75, impossible, not going to happen. From my trading experience, which is over 40 years, I've learned many times the hard way, never say never. The second you do that, it happens. So I never say never. Everything is possible and remains on the table until we let and got the news and we get everything in line and we see the market react. Everything else remains in place. Okay. Moving averages, nicely lined up. 4 and the 8, kind of giving a little crest here because we're down. So I would think that, very possible that we're still in alignment. There's the 200, there's the 50, there's the 20, etc. So very much in alignment to go up. And that's really going to be it for today. Now, what do we have in terms of economic numbers tomorrow? So tomorrow we have the ISM Manufacturing Index at 10 a.m. Eastern. And we have the ADP Employment Report at 8:15 a.m. Not a market mover, but hey, you never know. PMI Manufacturing Final, which is at 9:45 Eastern. ISM, market mover, 10 a.m. Eastern. Construction Spending, JOLTS, both at 10 a.m. They're marked green, which means they're not necessarily a market mover. Both can contribute. Just depends on what people want to hear and what they think they're going to key off of. And then, of course, we have the Fed announcement at 2 p.m. Eastern and the Fed chair press conference at 2:30. Also, after the close tomorrow, we have Metaverse. They're reporting on the 1st of February. That's tomorrow. It's going to be interesting because we got the Fed press conference, which are going to have a lot more reaction. And then, gee, is Facebook going to come in under the radar on this, or is the market really going to pay attention? My guess is the market's really going to pay attention. So again, we've got the start of some news that could really pull the market in all directions. Stay alert. I don't want to use that word alert, but just keep your mindset strong. And that's what's really going to work, so that you can see what's happening in front of you and trade according to the signals that you take. Follow your own trading rules. Have a great trading day tomorrow. And the next update will be on Wednesday, February the 1st.